Welcome to Managerial Accounting, ACC 210, also known as Cost Accounting. We will start off the semester with the first two chapters. First, we look at managers and management accounting, and we differentiate it immediately from financial accounting, which is information recorded and collected by accountants in order to report to stakeholders outside the firm. The purpose of management accounting is slightly different, is to report to management so that they have information which is timely and can be used to control the firm on a day-by-day, even hour-by-hour basis as they attempt to control costs. The goal, of course, of every firm is to maximize profits, and when we examine the formula for profits, we see that it is the revenues, total revenues minus total costs. Revenues, of course, are not controlled by the firm, they're controlled by the marketplace, primarily the customer. But costs are directly under the control of management, and so the various reports that we will study and reporting methodologies all have to do with reporting costs in large part so that management has a ready grasp of how to make adjustments. Management accounting, therefore, is aimed at insiders. The art of business is to produce something of value in a value chain. We will discuss the chain that exists between manufacturer, wholesaler, retailer, and customer. As each firm in the chain adds to the value, we want to look at how those costs are recorded, and we want to explain some of the guidelines to follow in supporting managers with timely information. A couple more learning objectives for Chapter 1 are to understand how management accounting ties in with the organization's structure and understanding what professional ethics means to management accountants. This chapter is about 10 or 15 pages long, and I would draw your attention to the chapter self-study problems at the very end and the terms to learn. Also, there are a number of other questions in here, and you will find also that I have assigned you regular problems for each chapter from, in this case, Chapter 1 and Chapter 2. Chapter 2 deals with an introduction to cost terminology. And here we look at total costs, average costs, marginal costs, unit costs, a variety of cost structures. The ones that I mentioned just now all come from economic theory, and we will take a look at a variety of cost terminologies. In particular, we're studying inventoriable costs in this chapter. The cost of building up an inventory available for sale, which can then be sold at a margin. In doing so, we're going to look at direct and indirect costs first of all. Direct costs are those that can be directly traced to production, and they are twofold. The first would be materials cost, and the second would be labor's cost. The third cost, which is not directly attributable to the amount of product manufactured or the amount of service provided, would be administrative cost, also sometimes termed overhead. This is an indirect cost. It is part of the cost of doing business, so we have to figure out how to allocate that cost over different types of production if indeed the firm is providing more than one service or product. A number of patterns emerge, and we look at particular cost drivers, and these are variables that causally affect costs over a given time span. They are, in other words, activities that are measurable and can stand in place of our costs. Also, we will take a look at the relationships of the different types of costs: direct and variable, direct and fixed, indirect and variable, and indirect and fixed costs. Total costs and unit costs are both useful to the cost accountant in reporting to management, and we note that there are also a number of commonly used manufacturing costs which we have already provided to you. direct, indirect, and rather direct material, direct labor, and indirect or overhead costs. Inventoriable costs are those that can be considered in a balance sheet. Period costs are those that come from various expenses. The manufacturing sector is going to be our primary example in this case, and I direct your attention in particular to page 41, which gives you a complete diagrammatic layout of how costs are accounted for in the basic manufacturing schema. Of course, measuring costs requires judgment. Judgment is what we have when we face a variety of opportunities or a variety of alternatives, and in order to exercise good judgment, one requires experience. Of course, experience is acquired by practicing bad judgment. So bad judgment eventually leads to good judgment, hopefully, as management learns by trial and error. Finally, obtaining the information is examined, and not always is accounting information readily available. Sometimes we have to use indirect measures or estimates of costs to be timely, but again, timeliness takes precedence over accuracy in the case of managerial accounting. Also, one should note that all of these various management reports produced by the managerial accounting staff are considered proprietary and are secret. One would not want one's competition to get those costs, and so they are not generally available outside the firm, but strictly to management. At the very end of the chapter, we have, again, a number of questions and exercises. I will assign selected exercises, but I would especially in this chapter direct you to page 59 to the terms to learn. There is a tremendous amount of vocabulary in these courses, and even if you are a native speaker, which most of you are not, you would find this vocabulary quite challenging. So don't shortchange it. Give some attention to those vocabulary terms. I would go through the list item by item and check off those with which I was already familiar, and then immediately look at the others and try to decide what they mean, look them up, and even you may want to provide yourself a set of index cards to make vocabulary cards with the item name on the front and the definition on the back. And if you carry these around with you, make a little habit of studying them a couple of times during the day for the week, you should be able to master all of the new terminology readily. And of course, in class, we will discuss these things. I will attempt to use all of the vocabulary and explain it along with some of the origins of the words, since a lot of that is familiar material for myself. Your homeworks will be due the first week. Policy is that homework that is turned in after Sunday is going to be downgraded one letter grade, or 10%, for each week that it is late. So the first week it would be, instead of, if let's say you had earned an A, which given the difficulty of these is probably likely that you would get a B if it was late by 1 week, a C if it was late by 2 weeks, a D if late by 3 weeks, and after that we don't keep track because the term is only 8 weeks long to start with. Again, welcome to the class. I hope you find this as fascinating as the accountants do. It is more of an art form than the traditional financial accounting, which is somewhat prescribed and narrow in its focus and purpose and methods. This one allows some imagination, some creativity, and I hope you find that enjoyable. Thank you very much.